Hello everyone, welcome to JMac Investing. My name is Jason. Just a couple days after I made the Lordstown Motors video about the Hindenburg research firm short report on them, how you don't really mess with them, I do want to say all about the context of the report. DraftKings also just yesterday got hit by Hindenburg research as well. We're going to look at the context of the points that they made in their research report, talk about if there's going to be any fallout from this. Let's jump into it. Hope you all are doing well. Like I said, welcome to the channel. If you're new around here, go ahead and hit that subscribe button if you're enjoying the content. Also hit the like button. Really appreciate you stopping by and checking out the channel. Just made a video about one of the things I've learned over investing into these speculative assets is to, don't mess with Hindenburg research. And while that still stands, I always make a video and I'll think later, I was like, I should have said this or I should have said that, or when this research report came out, it had me thinking, I really should have said that with not just with Hindenburg, but with any of these research reports or even just articles that are negative about a stock that you're holding. It's all about the context and the facts of what is in the article, in this instance, the research report. So yesterday, DraftKings got hit. They were cruising right along, kind of around $54 or so. Got hit and it went down around 17%. It rallied back a little bit since then and is down at current 11%. So I went ahead and I read the entire report this morning. I'm not going to go in detail bullet point by bullet point, but I'm going to high level it and talk about the context of it and why I personally don't think this one is as scathing as many of the other ones that have produced lots of fallout when being shorted, put in a short report by Hindenburg. Here's the research report that they wrote. DraftKings, a $21 billion SPAC, betting it can hide its black market operations. Right off the jump, like at the end of the day, this is a short seller company. When they write these, they open up short positions on these. So that's part of the deal, and also why you need to know the full context. I'm going to go ahead and just like I said, just high level it. Most of what's in this article is about SB Tech, which is a Bulgarian-based technology company founded in 2007 that develops back-end infrastructure for online gaming companies. So when the SPAC merger of DraftKings occurred, the SPAC merger was DraftKings itself, SB Tech, and the SPAC sponsor. They all combined to become one big corporation under the DraftKings umbrella. Well, you can see right here, so it says SB Tech played a crucial role in the company's go public deal, serving as the company's technological and financial backbone. It accounted, that's not true right there, just in and of itself. It's not the financial backbone, but it says it accounted, just right here in its own statement, they're contradicting themselves because they're saying it accounted for 25% of DraftKings revenue. They may be alluding to it being the future financial backbone, but at present it's not. It accounted for 25%. The deal made SB Tech founder and now DraftKings director Shalom McKenzie the single largest DraftKings shareholder. So some of the things they pointed out, or insiders have been selling the stock. Investors, I should say. Investors and some of the executives have been selling the stock. Well, it's rallied up 400%. So, yeah, you would think they would probably take some profits after building this company, so that's not anything that's abnormal. A lot of these guys, you just got shares as part of the deal. So, when you're selling them at $40 a share plus, and you had, whatever, multiple hundreds of thousands, shares, millions of shares in some cases here, these, why would you not go ahead and cash in some and then continue the company? But it was all about this here, dealings in black markets and connections to money laundering, all connected to SB Tech. And a lot of it was black markets in Asia, et cetera, et cetera. And it was a lot of he said, she said. It was that, a former employee of SB Tech said this, or like right here, a former SB Tech employee described Light to us as SB Tech founder Shalom McKenzie's right-hand man. He said that Light was 4 out of 5 reasons why McKenzie is who he is, noting Light's ability to network with black and gray market operators to grow SB Tech's business. It goes on, and it bullet points lots of things surrounding SB Tech. It's splitting out and creating sort of a new entity within SB Tech. They created a new company to kind of hide the black market, supposed black market or gray market dealings. So they've set up a new corporate office when the SPAC deal was about to occur. Bottom line here is a lot of, the market typically gets, a lot of this right. And you can see from, like I said, from let's just call it the 1 day big drop off of 11%, and from the all-time highs down 11%, tells you that the market isn't taking this as something that was really that scathing, or there was not a lot of potential fallout because of this. And also, another article I found interesting and that had some great points. What do people think after reading the Hindenburg Report? So Morgan Stanley points out that the company's dealings are more in the gray market, which is allowed by the New Jersey Division of Gaming Enforcement. Jefferies, which is another big analyst firm, is also on DraftKings side. The firm analysts believe that SB Tech, the source of Hindenburg Research's complaints, was acquired not for its revenue but for its technology platform, and it still maintains a buy rating on the stock. So they already came back and said still a buy. Kathy Wood of ARK Invest loaded the boat on the dip yesterday when the Hindenburg Research report hit. Her ETFs picked up a total of about 870,000 shares of DraftKings stock, reports Seeking Alpha. So my thoughts are that there's probably going to be some investigation into SB Tech from possibly the SEC. You could see that coming down. You could see the execs of SB Tech get ousted and get the boot and get fired. I don't think the CEO of DraftKings will get ousted here. In my worst case scenario, long-term fallout is that they have to sever ties with SB Tech, which, as stated in their most recent earnings, was around 25% of the revenue. So that still leaves 75% of the company's revenue on the books at present. That's why I think you're only getting the 10 or 12% haircut from the stock price, is because this doesn't really paint a bad picture of DraftKings overall. It's on the acquisition that they made through the merger. When a short report comes, the size of the company and their brand power plays a great deal in how much it will be affected. In this case, DraftKings, they really are spending just boatloads of money to get their brand into everyone's minds, advertising like crazy in key markets. They're on CNBC, partnered with Kramer and Mad Money, deals with NBA, NFL, UFC. Their brand is plastered all throughout the arenas, all throughout the events that take place on those professional sport events and television programs and streaming events. DraftKings has now huge brand value. Brand value many times supersedes a lot of other fundamental factors. So other than that, I think this one is not really that serious. There you go. I just wanted to cover this one because this is probably on a lot of people's minds, but I think DraftKings is going to make out okay on this one. So that's all I got till next time, guys. Hope you're enjoying the content. If you are, like I said, hit the like button, subscribe, do all the things. Consider picking up some free stocks from Moomoo, WeBull, and some cash from M1 Finance. All of those, you can pick up shares or cash when you open an account and make a deposit. I am an affiliate with those. Also consider joining the Patreon, patreon.com/JMac Investing. There you can get access to my entire portfolio and my buys and sells. That's all I got till next time, guys. Have a great one. Thanks for watching. Deuces.